And for that, we're going to bring in Jacob Frenkel. He's the Dickson Wright Government Investigations and Securities Enforcement Practice Chair. That's quite a title you have there. I know you used to work for the SEC in the Division of Enforcement, as well as prosecuting criminals as a prosecutor. So I'm just wondering, it seems to me, and we talked to a guest in the last hour about this, they might be targeting individuals who are trading on inside information, but hardly to me does it seem like this is something that's prevalent in the C-suite. What's your analysis of this situation?
This is not an investigation of GameStop itself, any of GameStop's disclosures. GameStop pretty much made that clear in its 10Q that it filed yesterday. I mean, so without question, this is about those who are participating in the trading. And the presumption is the SEC is looking at not only the long side, potential long side manipulation, also short side, could be individuals, it could be institutions. You know, that's not information that GameStop would know, or even if it did, that it would necessarily be disclosing. On the other hand, at least we now know that the SEC is actually probing something we've sort of been wondering about since January.
Yeah, Jacob, I'm going to have you grab water there, hopefully. But, you know, we had a conversation at the height of the GameStop trade back in January. And I remember we were talking about a potential investigation here. Now we know, to your point, that the SEC is looking into this. What kind of timeline do you think we're looking at right now? And what does that suggest in terms of how the SEC plans to go about this investigation?
Akiko, great question, because when we have a phenomenon like we were talking about back in January, in fact, when I was advocating that the SEC should have actually imposed a trading suspension, there is, you know, when you're talking about a market that appears to be out of control, you know, out of line with, you know, with fundamentals, the expectation is the SEC is going to move very quickly. This investigation is going to take well over a year. In fact, the SEC about 3 weeks ago brought a case involving short sellers where the conduct occurred 4 years before bringing the case. When the SEC is doing a case that involves trading, it's a very manpower, detail-intensive case. The staff has to put together all of the trading data, then look at the motives behind it, which includes talking to individuals. Presumably, they are going to cooperate. I mean, so it probably is somewhat ambitious to suggest that this investigation will only take about a year. It could actually take much longer than that.
I want to broaden the discussion out and talk about some statements that were made by Gary Gensler, SEC chair, over the last couple of days about reforming the compensation structure that exists in the market. I'm reading it as potentially an attack against payment for order flow in particular, but I'm wondering how you're reading the details of this situation.
Yeah, the short answer is it's still too early in the new administration at the SEC to figure out exactly where all of this is going to go. I think payment for order flow has certainly been an issue. We have seen SEC cases involving that. Not only recently the investigation around Robinhood. There have been inquiries about that on Capitol Hill. Although I'm one who unfortunately believes that if Capitol Hill would know what questions to be asking the SEC, we'd have more informed information coming before legislators. I think we really are in a wait and see mode to see exactly where all of this is really going to go. I think Chairman Gensler is challenged with a number of significant issues. To me, one of the most important of which is all of this discussion we've had around the meme stock trading and the volatility. And I mean, we were talking before about, I don't mean to get off the topic of of payment for order flow, but you come back to something like where you started the introduction with respect to GameStop. What were you talking about? You're talking about the fundamentals. How was the company performing? And the SEC, you bring that back to the SEC's responsibility, its principles, its mission of investor protection, maintaining a fair, orderly, and efficient capital market. Is this rhetoric? Or how is this SEC going to respond? I think Chairman Gensler has a lot of challenges on his plate right now, and the compensation issue is but one of them.
And Jacob, really quickly, since January, we have seen not just GameStop, but a number of stocks get caught up in the meme trade. Obviously, AMC more recently. We saw Clover Health this week, a number of other names being added. It feels like the meme trade is expanding with every week. You said when GameStop was trading at its height that you think trading should have been suspended. Are there any other names that you've seen since that have raised the red flag for you in the type of trading that's happened?
There's no question that's occurred with AMC. That occurred, in my view, even with stocks last year that were in the what I call exchange listed or large cap market trading stocks involving COVID solutions. It's very easy for the SEC, and it does, widely suspend trading in small cap stocks. What we lose sight of when that happens is we always think of trading suspension as being a 10-day statutory period. For an exchange-listed stock like GameStop, AMC, the SEC could suspend trading for several hours or for a day. And that's very clear in terms of its statutory authority. I think in all of these stocks where you have trading that is just breaking through circuit breakers that are designed to provide for some level of control and efficiency, I'm not suggesting the SEC should be micro-regulating all trading or preventing stocks from being able to move at much larger rates than are normal, because there are business reasons that happens. But I think one of the challenges is when you're talking about this meme stock trading, should the SEC be using its trading suspension authority? I think it missed out on a tremendous opportunity in the context of GameStop back in January to say it was going to be involved forcefully. And here we are now in May, and just learning for the first time from the company itself that it received a request for voluntary information. I think all eyes are on the SEC as to how is it going to react to the meme stock trading frenzy.
Yeah, and it's difficult to deny there's a certain amount of dysfunction in the markets now. All right, thank you for that. Jacob Frenkel, Dickson Wright Government Investigations and Securities Enforcement Practice Chair.